Greetings. You are now tuned into the Vault. Trust Christian, own under control everything. This should definitely make sure everybody can hear me now. I knew everybody was sitting there doing their best to tune in live, but we definitely are here. We'll just have to edit that out at the beginning of the episode. You'll hear that. So this is Trust Christian, own under control everything. Appreciate everybody for tuning in live, listening to replay. This is the Vault 294 by When It's Blood in the Streets. Always appreciate everybody for tuning in live, listening to replay. This is once again the Vault episode 294 by When There's Blood in the Streets. And so we want to start out by talking about how there's so many different investments in the marketplace. And appreciate Jersey City for tuning in live, listening to replay. Shout out to Kansas City for tuning in live, listening to replay. Appreciate Kansas City and Jersey City. Feel free to type where you're listening live or listening to replay from in the chat. Always appreciate everybody tuning in live, listening to replay. This is episode 294 by When There's Blood in the Streets. This is all about when opportunity comes upon you all, ladies and gentlemen. And so we started out this episode by talking about how Wells Fargo has just sold off their private wealth division to two private equity firms. And most people are not familiar with what private equity firms are. So you see, one of the banks is selling off their private wealth management administration, and they're selling it to two private equity firms, which is very important, very significant. Why? Because these companies, particularly private equity funds, are able now to buy banks, their wealth division. They're buying clientele. They have access to billions of dollars. That's why they got the fund for $1 billion plus. So we wanted to talk about that. We could talk about that on this episode about how they sold off their private wealth division, but this all comes down to the individual investor. So this is not financial advice. This isn't, any legal advice. We just always want to clarify that. But this is a straight up conversation. When the opportunity comes, are you ready to buy? Because as it stands right now, when people are talking about the marketplace, people are saying things are overvalued. But nevertheless, if anything weakens in the marketplace and we see that the prices are depressed, what are you supposed to do? Buy when there's blood in the streets. But what's going on now? Are people buying? Are people investing in their education? Are they investing in the investments that might pan out in 6 to 9 months or 12 months to a year or two? Is it considered blood in the streets when you know that the market is going to have to grow in the next 2 years? Why? Because these companies have to grow. These companies have to grow. It is a demand for a growth market right now. So in a growth market, what are you getting? You get in growth, and you can get in value. Are you buying when the blood is in the streets right now? People say, oh, there's no blood in the streets. There was blood in the streets last year in 2020. And the situation is happening right now. People are saying, oh, it's going sideways. Things are going sideways. The market's going sideways. Okay, the market's going sideways. That's an assessment point. Are we assessing the market? Have you seen declines? Or are you seeing highs maybe every other week? So people are supposed to be buying when there's blood in the streets. But somehow right now people seems like are unprepared sometimes in the public marketplace. They don't have the $10,000. They don't have the $15,000. They don't have the $20,000. They don't have the $30,000. 80% of the population doesn't have 10 to 15 to 20 to $30,000 to just go put in an investment. So now people say, well, where's the middle class at? People say, is there still a middle class? Yes, there's a middle class. There are people that are in the middle class that have a $25,000 charge card. They have a $30,000 charge card. They have a $50,000 charge card. They have a $100,000 charge card in the middle class. So they can go take that card and put it in investment and get and do something to try to make it perform in 30 days. Charge cards. They have more than one of these charge cards. So the middle class has credit. The poor, they don't. The blood in the streets right now is these companies right now where they're trying to say that they're possibly overvalued, and we're starting to see corrections. Ladies and gentlemen, do not be fooled. You just saw $1.9 trillion be put into the marketplace. It's blood in the streets because the dollar's cheap. That's why. The dollar's cheap because it's blood in the streets. So what are people doing? They're buying. They're using the almighty dollar. So why are so many people betting against the dollar? Because they just issued $1.9 trillion into the marketplace. They just made the money cheaper than what it was. They got more in the circulation in the Americans' hands, which is going to go in the foreigners' hands, because Americans are buying foreign. They want everything foreign. Not every American, but as an analogy. Buy when it's blood in the streets. Ladies and gentlemen, you didn't see the wealth transfer last year. It's still going on. The wealth transfer takes years. It's not 1 year, it's years. This is where they're going to put many families in the dirt. They've actually extended moratoriums, and now we're seeing the marketplace have a demand for opening. A demand for opening. That's blood in the streets. Why? Because that means the companies that people even just bet against, they might actually have to get up off that. Why? Because foot traffic is going to allow people to add profit to these companies. When companies get profits, they're supposed to report earnings. Companies right now are not reporting earnings because they're trying to say that they're not getting profits because of the situation. Some companies have benefited from PPP, some companies have not. The wealth transfer is still happening. It's still going on. You're supposed to be buying. You're supposed to be flat broke buying investments. Because the marketplace is demanding that money go somewhere. If it's going to go to the form of PPP to people or to individuals or to investors or to businesses, it's going to go into the marketplace and someone's going to spend it, and they're going to spend it somewhere. Businesses are going to in turn make a profit. Now, some of them are already filing bankruptcy and are going under. Ladies and gentlemen, you buy when there's blood in the streets. You're in that moment. You go back, you look at these companies. Do you guys really need us to do it? Do you need us to go and look at the companies right now that we could say we had partners come around and share, hey, this is a possible play, and it's up. It's up back 4 or 5 times. This is a wealth transfer. Of course you buy when there's blood in the streets. That's the only way you're supposed to do it. You know, there's many ways to skin a cat, as they say. But at the end of the day, the business is growing assets. Of course you buy when there's blood in the streets. That means the assets are at cheap prices. Do we think in 2 years the market's going to be lower or higher? Well, let's think about this. All the institutions have said that for the most part, they think that the market's going to end higher than what they projected last year. Because the institutions try to actually tell you that they're thinking long term, like 2 and 3 years out. Oh, we're thinking 2 and 3 years out. So we're telling you we're thinking 2 and 3 years out, maybe 5 years out. They're going to tell you all this information to try to speculate out 3 and 4 and 5 years. But that year in general, they've already upgraded the market projections for this year. Why? Because they understand that stimulus is just one in the marketplace. You just saw stimulus go in the marketplace. That means that somewhere money has just gone in, and that's actually public money. That's not just private money. That's public money. Private money is right there in the play with public money. They're investing in communities. Private money. We just said that a private equity firm just bought Wells Fargo's wealth management division. That means they're managing clients that have money, that are private. These are private equity firms. So they're buying, when it was blood in the streets, the private equity firms, they're buying Wells Fargo's private wealth management division. That's what they're doing. So as an individual, investor or otherwise, when we're looking at the situation, we see, okay, we have to know how to play this situation right now. How's this situation looking, ladies and gentlemen? It looks like people are saying assets are undervalued, but we also hear a market consensus that the assets are overvalued. Okay, what assets are being overvalued? We're hearing on the street technology are being overvalued. Well, we've seen this already. Ladies and gentlemen, we can do an episode. It's called The Age of the Unicorns. We are in the age of unicorns. We are in the age where companies have large valuations, but they may not have a lot of revenue. They may not have a lot of sales. They may have, oh, they raised a convertible note of $300 million. They raised another note of $500 million. They raised another note of $500 million. They got $1 billion and $1.3 billion. Oh yeah, these guys raised, this type of capital. And so, how much money have they sold? Have they sold any of their product? Not really. How much have they sold? About $1 million worth. And they got money in expenses. They got money in R&D. So are you investing in those type of bleed 'em stocks right now? Are you investing in those type of companies right now? Because that's where we are. We're in a market where we're living. Last year, people lived off tech. They're saying tech is done. They're saying tech is done. How so? Oh, because people they wanna get rid of the technology. No, there are actually going to be some strong performers right now that are actually going to keep these companies in front of you, even in the public marketplace. Whether it's Starbucks, whether it is any other major company, what if you see a Starbucks pull off like a Chipotle? Let's go look at Starbucks stock. We haven't seen them in a while. Starbucks stock is definitely, Starbucks has definitely been one of those plays that we've seen for a long time. I'll go ahead and pull that up for you guys. Year to date, it's up. Okay. So this company, it looks like they're a turnaround story. And that's exactly what they need, because America loves coffee and Starbucks is international. So, what are we going to see? People come out their houses and not go to Starbucks? Are you serious? No. It looks like people are going to come out their houses and they're going to go to Starbucks. These are common sense plays. We're not promoting this company. We're just talking about the facts, the common sense information. Shout out to Delaware. Appreciate Delaware for tuning in live, listening to replay. This is an easy moment right here. And do you think it's not blood in the streets with this company? They just used last year to come out of the pandemic on top. They're at the highest moment that it's been in, we'll say, it's actually been playing around at a number for about the past 2 or 3 months. But nevertheless, the company's at the all-time high for the past 2 or 3 months. The past 2 or 3 months, it's been at the all-time high. So when people go out the house, they're not going to go to this place? They're not going to utilize the technology to order? How diversified is this company's portfolio? That's where we are in the marketplace today. Common sense things. People say, oh, where's the money going to go? The 1.9 trillion. It might go to them buying Starbucks. It might go to Panera Bread. It might go to these off-brand companies that, well, they're not off-brand. Starbucks is actually a major brand. But go to a company that, money's got to go somewhere. Somebody's going to buy Starbucks coffee. Yes, And it's going to be a part of that $1.9 trillion that's just going in the marketplace right now. It's a part of that. It's a part of the discretionary spending that they want to have happen to keep these American companies alive. That's what's going on. So, are you buying when there's blood in the streets? That's what's happening right now with the private equity firms. And what do you think people are going to do when they go out their house and go to Starbucks? They're going to buy too. But hold on. What happened to this thing called inflation? See, no one likes to talk about this word because it's this spooky grand old uncle ghost that no one wants to talk about. It's like Uncle Sam. They got Uncle Sam, then they got inflation. That's an uncle too, and they come to visit every now and then. And when the dollar's cheap right now, because it's being pulverized by the gov wanting to keep the Fed injecting capital into the marketplace instead of letting people thrive or survive. They're casting a blanket of artificial financials, artificial intelligence. And so at this point, you're starting to see a group consensus where people are wanting to bet in all this other additional asset fixtures instead of just betting on a dollar. That's making it lose value. What do you want to say? Crypto? You want to say emerging market dollars or emerging market currencies? These countries, you're familiar with sovereign wealth funds. Sovereign wealth funds are alive and well right now. If the private equity is buying right now, sovereign wealth funds are buying right now. So the question is are you buying right now? Are you raising capital in the time of need when the wealth transfer is happening? Are you raising capital? Can you raise the capital to buy? Do you have the capital to buy? Are you raising capital to buy? You're either raising capital from other investors or you're putting up your own capital, hard capital. The private equity firms didn't even put up their own money in that particular case. This is a game of cat and mouse and show and tell. And the game is very elusive. Of course you're buying when there's blood in the streets. That's the only market that you can see the foreseeable future. It's one of those things you could take a position right now. You say, do you like where it's headed? Some people would say in the interim we could see some slowing down. Why would we see slowing down? We have pent up demand. Where is the slowing down? It's on the production end. Oh, okay. Companies, they got exhausted last year. They ran into a lot of employee situations where they had the manufacturing got slowed down, at periods of time throughout the year. So that's catching up right now. We can see that there are companies coming out and reporting, hey, we don't have the production stat capability right now to produce this product and things of that nature. And this is even in the technology environment. So not only are we seeing it in the technology environment, we're seeing it in many different environments, specifically hardware as well. Hardware productions have slowed down slightly because of the fact that we're looking at these companies that were exhausted last year. They had a lot of employee deficiencies, a lot of rerouting of employees. So there was a lot of supply chain issues that we saw last year. And now we're at this critical moment. What is the critical moment? The moment of, are these companies cheap or are they overvalued? That's what people are saying. So you're getting this consensus, oh, these companies are overvalued. But we're seeing everybody pile in. We're seeing private equity pile in. We're seeing angel investors pile in. We're seeing all type of investors pile in to these investments. Bottom line. We're seeing investors pile into these investments. Oh, we had the highest number of recorded investors trying to get on these Robinhood platforms and all these individual investor platforms. Why? Because they're trying to buy when there's blood in the streets. Americans are sniffing blood. They can smell that the American stock markets are on an all-time high and rally, and they are ready to take it to even all-time highs. And guess who they're betting on? Facebook, Amazon, Netflix, Google. They're betting on their American tech stocks to keep yeehawing them to all-time highs. Well, where's the rest of America in tech? They are coming up in many different areas. So, you think tech's gonna slow down? They tried to fool you with that line. The newsman got you so he could shake you out of a position to go where? To go to energy? Because energy's doing bad. If we go to those companies in Texas, they just earned a bad reputation. They didn't winterize their product. So what are you doing? Are you buying those companies when they're going down? Of course not. But market consensus says, oh, you got to get the company when it's going down. No, you don't. We want rallies. Americans want rallies. They love bulls. They don't like being bears. They're bulls. And the current administration that's in office right now is saying we're bull type people. We're going to keep the Americas pumping and jumping. We're not going to tell you that our companies aren't going to invest in Tesla, but we're invested in these companies. Oh, really? That's the type of plays we're seeing right now with blood in the streets. And these institutions, they're sitting in strategic positions. Positions that the average American, they're not going to be able to collect on unless they're actually invested in these investments. And right now, the Americans, they may be underinvested. The companies are almost undervalued. But they're saying, oh, these companies, they're going to have some type of long-term lasting value. Somebody typed into the thing DoorDash. This is a temporary company in the marketplace that says, okay, we're going to take food from the company and take it to the consumer, and we're going to have somebody in the middle do that, such as a freelancer, and we're going to do a 1099 relationship. Well, okay, you know how these companies are making money, marketing. Okay, at the end of the day, look at that. What makes another company not be able to do that? What's proprietary about that? So that's why they're trying to say, oh, these companies don't have long-term lasting value. Amazon damn sure has long-term lasting value. They have other companies. Check out their portfolio. You got to check out companies' portfolio so you have the position to buy when there's blood in the streets. Is Amazon undervalued? What do you think, people? Some people say, oh, this company is this, that, and the third. Ladies and gentlemen, we're in the era where the government's issuing $1 trillion in a package. Of course there can be $1 trillion companies, and we're seeing it right here in front of our eyes. And so this is where we act in stride and we go into $1 trillion industry. Now clearly Bezos has showed you that Amazon can be in maybe a few countries and actually have traction to be $1 trillion company. Same thing with Apple, and same thing with other companies that are American companies. These are American companies. Yes, people are buying when there's blood in the streets. Is capital working for you right now? Is capital working for you? Because these companies right now are saying, look, money's got to go somewhere. We're going to take on the increased demand for internet play. Now, if we see a slowdown in internet, are we going to see more in companies such as a Disney when their theme parks get open back up? Because as it stands right now, Disney pivoted. Disney said, we're going online streaming, so we got your attention with the mobile play, streaming mobile, and then they said, we're going to catch you when you come back outside. This is a company that has strategically placed themselves in a position of not only hard brick and mortar money. They position themselves with the mobile. And the mobile is one of the most liquid assets, liquid gold, because so many people in the developed world have a mobile. And so many people in so many other countries have the mobile. And so streaming has become, if you can get into emerging markets, if you can get into mobile devices, you can stream. This is the marketplace today. And now you see these other companies that have streaming services on top of their other services. That's what. These companies know what they're doing, ladies and gentlemen. You got to check out their leadership. Some companies, they know how to pivot. And that's why you go. Let's go look at Disney stock real quick. Go look at Disney stock real quick while we're on here. Disney stock, ladies and gentlemen, year to date and over the past 5 years is at an all-time high. Right now, as we speak. As we speak. It came off the all-time high, which is Tuesday at 3 p.m. It was at 198. It closed at 197. Walt Disney is at a all-time high. And when you look at last year's returns, you can see that it's increased. This company has made it a point to create high performance. They are at their high performance peak. They have pivoted. The company's selling merchandise. This is an American staple. The Disney company is an American staple. You think that anybody's going to let them go under? But what happened? How many people were buying in the streets last year? Were they buying this company? And even right now, oh, it's up there. It is up there. It is up there. But they made it a point to show you why they're valuable. Oh, somebody wants to short them. Okay. And this is a company that, once again, they have merchandise, and not only that, they're releasing movies. They're competing with the HBO Maxes. They're competing. That's what they're doing, and that's why they're receiving capital. Appreciate everybody for tuning in live, listening to replay. Shout out to everybody that tuned in live, listening to replay. Christian at TrustChristian.com for trustee training. We're actually starting out the year in a grandiose fashion. Right now, with we always have these moments where things just get crazy busy, and we're always appreciative of that at the vault, where we just end up getting really busy very early on in the year. And a lot of times that just comes from just always having those great relationships when you're really working in the marketplace and you have a lot to offer. You can see the value that people they kind of want to work and move forward in so many different fashions. So many people want to work together in their particular fashion, and it's interesting that everybody has their particular needs for whatever that we're talking about. So appreciate everybody for tuning in live, listening to replay. This is the Vault Blood, Vault 294 by When It's Blood in the Streets. Appreciate you all for tuning in live, listening to replay. And we just wanted to do this episode because, like we say, it was something that right now we see investors partially sit on the sideline, and money is already pouring back into the marketplace like savages. The money that's just been infused into the marketplace with the $1.9 trillion is showing that money is being infused back into the marketplace. And so money is being infused in the marketplace. And so this is, once again, a wealth transfer. That means whoever can come up under it and catch it, you can catch this wealth falling straight in your hands, because it's going to go somewhere. It's going to go into a business predominantly. You got to know that. It might not go to an employee because they might not have a job, but it's going to go to a business that's over there collecting the money and collecting the proceeds of the benefit of the benefactor of the fact that the government has just issued $1.9 trillion into the marketplace, whether it's to give somebody a protection loan or even just to give a consumer some type of discretionary spending money to go spend money on their favorite brand, or to even go and buy Disney and things of that nature. So we're going to see this wealth transfer continue to happen, and it's going to continue to blast through this year. It's interesting for somebody to say, oh well, this blast blast is not going to at least last 6 months. This blast is definitely going to last at least 6 months. We've seen this already, especially when they give this type of capital into the marketplace. What you think about what held Americans over through COVID last year, they were given quite a bit of capital, and Americans say, well, we weren't given enough capital, but at the same time, there were still Americans that were working, and at the end of the day, we're starting to see that, Americans were given some money, and right now we're seeing that assets are slightly in a moment where they're partially depressed, and so there are moments right now where we see things are definitely like taking a break and yielding, and that's fine. A lot of the market, saying, oh, we need to see some slowdown. We've just seen a run on the money for the past 8 months and things of that nature, and it's like, okay, we have seen the run on the money happen, and what's wrong with that? These companies are actually producing, so what are they saying? And so some of the things that we're not hearing, where some people are talking, is possibly jobs. Are people in a position where there are jobs out right now? Do people have jobs? Are they working? And clearly, we've seen that it doesn't matter. Why? Because they're pumping out money into the marketplace that people are going to spend with these companies. So even in the interim, we would see these companies actually start reporting positive earnings. And there's nothing wrong with us looking out, at least 3 to 6 months, because what we're seeing right now is that these people, they just pumped into the marketplace some artificial financials, and so when you give people money for free, quote unquote, it once again it cheapened the dollar. So the dollar is at a low. We can go look at it. We'll go look at the dollar right now and go see the dollar index. So you guys can look at it, DXY, the dollar index chart, DXY once again. Uh, and so when you look at the dollar, even today, it's almost like reaching even further lows. And so even in January, we saw it at 89. Right now, it's at 90. So the dollar is at a position where we do see some leakage. We do see some down. And so people talk about that. Oh man, it's at almost the all-time low. It's just like, okay, and you know what are you gonna say? It's not even actually at its all-time low. It's back to where it was in almost like 2018. And so this is drawing for a concern of possibly a market correction, either even further to the downturn. Well, okay, after we are going to see what we could see, which is a further weakening of the dollar. We could see that here. We could see that. But we need to see further confirmation from consumers not getting cheap money to go out and spend in the streets. They're going to spend because they're going to put the blood in the streets for these companies. They're going to say, hey, look, these companies are going to always beat the consensus. They're always going to beat the estimates. These companies have been beating estimates. The banks have reported beating estimates. Do you think they're not going to keep reporting beating estimates? They just got money from the government. Why would they not keep reporting beating the estimates? Now, we may have not seen airlines do that, because the estimates, we know that these guys aren't flying with full capacity. So, we have some market conditions that are against them. But there are other companies that we're going to start continuing to see them beating estimates. There are companies right now beating estimates. And so we think at the Vault, you want to be very selective in your selection of your buying right now when you're looking in the marketplace. What is your selection portfolio looking like? Are you diversified? How diversified are you? Because there is a barrage of things that we can buy in the marketplace right now, for sure. There are many things that we can buy in the marketplace. And we can see that right now. I mean, whether you want to see it or not, last year things went well. We just saw a break for almost a 10 or 12-year run. Why would you not see another run? Okay, so we see a quick recovery, and then we see a growing outside of that to back to positive returns and positive gains. Well, that's what it looks like. Positive returns and positive gains, because money has to go somewhere. Money's not going to sit on the sideline in this particular case, and we don't see that happening. We see definitely somewhere where assets, capital is going to be allocated into investments, and so we're seeing it go into different environments, different asset classes. We're starting to see people even try to take more of a diversified portfolio, whether that's people looking at crypto or not. We see people taking these different approaches towards their portfolio and how they're buying right now. When people say, oh, somebody said the other day, we saw a meme on the internet. It said, oh wow, Bitcoin's at 43,000 and you're still not buying? It's like, well, what are you talking about? So we see this run on the money right now. We see these type of things where people are just they're these are almost so much of a FOMO trade. We're seeing so many more big money players go into this space and they're just piling capital in right now. We're seeing more celebrities put money into this private space. We're seeing it's like, are you guys developing a technology? Because that's what it is. It's a technology play. And that's what people are doing right now. We can see it. They're buying into that dead cat bounce laggard, sort of like almost like the internet. We're seeing where people almost would like to say, well, the market is at where the market was, when 2001, and even in 2001, the market volatility for the dollar was so much even higher. So right now, it's under the run of the money for 2000, when the market for these tech companies went under. The dollar got stronger. And so right now when we're looking at it, we can see there has been a downtrend. But we also know that we got to look at market indicators, ladies and gentlemen. What's the market indicators right now driving behind the dollar getting weaker? They're putting money into the marketplace. They've been doing quantitative easing for the past 2 administrations, past 3 administrations, there, when you put money in the marketplace like they have since the financial crisis, you're going to see volatility in your money. Right now, we're seeing that. And we're not seeing it for the positive for the dollar right now. A lot of Americans are saying that prices are going higher. Well, we've seen that for 3+ months. We've seen that for 6+ months. Of course, we've seen that. And prices are going to look like that. They're going to be reflective of how much the money has gone down in value. Oh, so are people buying a dollar? Well, there's maybe a significant interest in shorting it. But will the dollar get stronger? With the way that they're spending, you can tell that they haven't recovered from years of. You can't outspend. It's like you can't outspend the bank, and so they are the bank, and they're not going to outspend themselves, but they are, and you just can't keep outspending. This is not the way financial economics work there. It's like if you read financial economic books and they say that Rome went out of business because they had too many debts and their people couldn't pay their debts. Well, what happens when a country does that again in history? They just end up going out of business because they can't pay their debts. Now, granted, the United States is a very strong contender, a very strong player. We don't want to wish for the worst. We've heard about the worst for many years, Americans have. And that's why it's so important to diversify your portfolio with where you're able to travel to, because you see what's going on in the States. Appreciate everybody for tuning in live, listening to replay. Shout out to everybody that tuned in live, listening to replay. Christian at TrustChristian.com. Look forward to hearing from you all. Peace.